What is it that you did that you think most people are missing out that allowed to unlock that fast growth?
We burned the bridge, man. And once you quit the job, like we were all in. Like there was no going back from that point. It's not like I was a real estate agent and then did property management on the side. I was like, I am just going to do property management and we're going to be the best in the area on it. We went from just thinking like, I believe that we could put out a better product than where we just stayed. From that point on, we've gone from 0 to about 175 properties under management in about 3 years.
One thing is getting started and starting to sign a couple of owners here and there, but past a certain point, you start to need some structure in place. So if you and your partners are not complementing each other, it can become difficult.
And it was a nightmare.
We're definitely gonna have to dig a little deeper there to understand how that happened. All right. Welcome, everyone, to the Hospitality Edge podcast, the podcast where we bring together what we think are two sides of the same coin, real estate and hospitality. Today, I'm very excited to have Andrew Pokrzywinski with us, the owner and founder of Joseph Ellen Properties and partner at Joseph Ellen Designs, who has an amazing journey of rapid growth, both as a property manager and as a real estate investor, that I'm really, really excited to jump on here today. So, Andrew, thank you so much for taking the time to jump on this podcast.
Yeah, absolutely, man. I'm super excited to chat and kind of share our story and also a couple of our mistakes as well. Lord knows we've had a ton of them kind of getting to this size. So I'm excited to dive into it.
Absolutely, man. So yeah, let's start with just some background story of how you even got into the vacation rental space in the first place. Because I see that you were involved in sales and marketing roles
Yeah.
previously. How did you transition from that, working for someone else, into basically ending up in vacation rentals full time now?
Yeah, very good question. So it started quite some time ago. So I actually started on Airbnb in 2017. So I was working for a marketing agency then, and it's kind of a funny story. So I had a friend and a colleague that he was renting a loft apartment downtown St. Louis. And I wanted to rent in the exact same building. And he told me that what he does is he travels and then he rents it out and then it covers his payment. So we were kind of doing master leasing and arbitrage before it was kind of cool to do master leasing and arbitrage. So got a couple of those units, and then it kind of died off because I dived into, my corporate career from that point. So I was a sales manager at a marketing company. I worked for another agency where, I was kind of a national account executive there. And then I met my now wife, Melody. So we kind of both got into real estate at the same time, and COVID had hit. So she actually worked for a commercial broker. So she was managing all his commercial properties, doing his books, creating his LLCs, all of that good stuff. And we went to go visit Jacksonville and St. Augustine. And we actually stayed at one of his beachfront homes because we were just visiting the area. It was COVID. Florida had really nice unrestrictions whenever it came to COVID. So we wanted to get out of St. Louis. And whenever we were staying at one of those beachfront homes, it was managed by one of the nationwide companies. So not going to drop any names, but we didn't have too good of an experience. And we kind of told him about that. And then he had mentioned from that point, like, hey, you already manage my commercial properties. You guys should just start a vacation rental management company. So we kind of did, on a whim on that day. And that was about 3 years ago. We went from that conversation just thinking like, I believe that we could put out a better product than where we just stayed. So from that point on, we've gone from 0 to about 175 properties under management in about 3 years. So it's been a wild journey. We're still growing. We still got a lot to learn, but it's been a fun ride so far.
Man, that's crazy. Yeah, so 175 properties in 3 years. We're definitely gonna have to dig a little deeper there to understand how that happened. Because I'm sure it wasn't just, you went to bed one day, you woke up 3 years later, and there you had 175 properties. So let's start at the very beginning of this journey. So you're still, working for another company. You started doing some arbitrage, from what I'm understanding. You then meet your now wife, and you guys start in real estate together. So talk to me about that first actual acquisition that you did, real estate related. Tell us about that first acquisition, how it went, and we always make rookie mistakes when we're buying the first property. So I'm curious to know now, with everything if you were looking at making that first acquisition again, what would you perhaps do differently looking backwards?
Yeah, I mean, we almost didn't continue. So we bought our first rental property in it was 2019. This was right before COVID. So we actually bought a duplex. Like I said, we both kind of had interest in real estate whenever we got together, and that just kind of blossomed whenever we got married. So we kind of put two incomes together, and then we put that down on the property. So we actually lived in the front house of the property, then we rented out the back house of the property so we could get our mortgage paid for. However, anything that kind of will go wrong will go wrong. So I think it was the first month or two. We had like a hot water heater go out. We had our pipes freeze because we were in St. Louis. And this was our first step into, actually owning a property and operating a property. So as you can imagine, like whenever you first buy a property and then you have $8,000 worth of repairs, you're almost like, shoot, did I make a great decision here? So we were definitely second guessing some things, but we knew that we had to dive more into real estate if we wanted to quit our W-2 jobs and make that transition. We knew that that was the path, kind of towards financial freedom. So that's why we continued to kind of stick with it, dive into real estate. And it was great because our properties were appreciating so much there in St. Louis at that time because it was right before COVID. So that property that we bought, we actually bought another property from that point. And then before we made the move to Northeast Florida, we sold those properties. We hardly did any work to the first property that we bought, and I think we probably made 60,000 off of it just from appreciation with the property. So we reallocated that capital into Northeast Florida, and then just one property at a time, we kind of grew the property management business. But we almost didn't continue after that very first one because we had those big expenses. So it was kind of tough whenever you're first starting out to believe in a vision and like a path towards financial freedom. But we put it behind us and I kept going.
Got it. Got it. Okay, so then you move, and I just want to understand, do you start with another acquisition, or do you start with property management? Like, I want to understand how the two sides of the model were coming into play. Was it more like, okay, now we have this property we just bought, we want to have it be a short-term rental property exclusively, but like you mentioned, you've had experiences with nationwide companies for the property management. You were like, I think we can do this better, or was it the other way around? You first started managing for others, and then you were like, okay, let's continue buying.
Yeah, so we had to use our properties, man, because we had to have a proof of concept. So whenever I'm going out and pitching people on property management, we had to have something. And I think in the very beginning, I think any founder probably feels this exact same thing, but it's a little imposter syndrome and kind of fake it till you make it. So whenever we got into Northeast Florida, we bought two more rentals and we made those short-term rentals. So we got the experience operating the rentals ourselves, and we knew how to do everything. So we both came from corporate jobs. We got to a point to where our rental revenue was making as much as our jobs were, and then we just burned the bridge and made the commitment. But the benefit of doing that is like we were cleaning our own houses, like we were doing the maintenance on them, like we were doing everything. But it's good to get that experience in the very beginning because then I could go pitch owners for management and be like, hey, I'm managing our properties and a couple more. And then it started to snowball after that, but we had to start with acquiring some things so we could get that experience and so we could have some credibility whenever we went and did the owner acquisition on the management side.
Yeah, yeah, yeah. No, that makes sense. So okay, so you start with two that you buy, they are yours,
Yep.
and you're self-managing, essentially.
Yep.
There's a lot of people that decide consciously that they just want to keep being owner operators. They just want to try to, grow their portfolio, but they never want to go into managing for other people. And then there's
Yeah.
operators that see managing for other people as a way to get additional cash flow without that much, upfront investment, so to speak, that you can use to qualify for
Yep.
more loans on your personal
Yeah.
portfolio side of things. So I'm curious to know what's your thinking. When did you decide, okay, let's open this up and let's grow the portfolio on the property management side of things? And what was sort of the reasoning behind that?
Yeah. I think that it took us a ton of time to regain the capital from buying properties. So that was the first thing, especially when you're young. I mean, I'm only 31, and I think we probably started this whenever I was 27, 28. So we were working our corporate jobs. We were doing well, but it still takes a second to get that down payment back. So we saw the management as an opportunity to scale a little bit quicker. And I think it was kind of the way that we were wired as well. I think by heart we're operators. So it was a little bit more easy for me to get into managing properties and kind of building that out. So whenever I worked in my corporate job, there were a couple larger startups. So we went through like multiple rounds. I saw how quickly companies can scale. So I did get a ton of good nuggets from, working a W-2 job. And I put that stuff in and kind of built the foundation for our property management company. But I just saw it as a better way to scale. We didn't feel like it was another job because I love operating. So I don't want to say that it's easy for me, but it's something that I enjoy more. So it's not like, oh, this is a hassle. It's another job doing the management. Like I really enjoyed it. So it kind of felt like it worked with, our tendencies and who we were as people. So that's kind of why we went into the management side and then just continued to scale it from that point. But yeah, we definitely took, things we learned in our corporate jobs to kind of build the building blocks for the management company.
Yeah, no, that makes a lot of sense, and I wanna understand what would you say are some of those nuggets that you took from your experience working with high growth startups and whatnot that you think you've applied in building your property management business that have allowed you to grow so fast. Because I think one thing is getting started and starting to sign a couple of owners here and there, but past a certain point, like past 10, 20, getting at 30 properties, you start to
Yep.
need some structure in place. You start to need some infrastructure where if you don't have it right, and you have the mentality of you still having to be the one who does absolutely everything, you can't grow
Yep.
past a certain point. So what did you take from that, W2 experience of high growth with other companies and with other startups that you were actually able to apply in building this property management business?
Yeah, a lot of foundational stuff. I mean, brother, I'm still getting to the point 3 years in to where I'm delegating stuff out and I'm trying not to be as much in the weeds. So we're just now getting to that point. We've always been super involved in our business, but the first job I had out of college, it was a marketing agency. So I learned the building blocks of building a brand, doing social, email campaigns, driving leads to your website, the website design. And then the second job I had before we actually made the transition, I was selling a compliance software to banks. So I know how to, build a sales pipeline. So that stuff combined help us kind of get it off the ground. I mean, we had a little imposter syndrome whenever we first started. So, like I had mentioned, we had acquired two properties. We made them short term rentals. We learned how to become operators, and then I had to go pitch it to other people. So, before we even had 10 or 15 properties, we had our website built out. I was like doing blog posts and putting it out. I was running our social media. So, whenever I went out to owners, we were starting to get leads to our website. I could field that conversation just like I did in my previous job as a sales manager and then share the value that we can bring. So, I can say like we manage our properties and a couple more, and we just needed a couple people to take a chance on us. So it really helped knowing the marketing ins and outs and also building a sales pipeline. I still to this day take every sales call, go on every single meeting, run a follow up process. But I think that's helped us scale to our size in 3 years. It's definitely set the foundation to where we are now.
Beautiful. No, I love it. Now,
Yeah.
when it comes to the skill sets that you have, um, and how they complement with, let's say, your wife's skill sets, we
Yeah.
talk a lot in tech about the ideal trio of a hustler, a hacker, and a hipster, right? So you have the growth oriented person that's all about the financing and the marketing and the sales, and then you have the person that's more like technology oriented in a SaaS type of company, and then you have the person
Yep.
more like product, UX, UI, whatnot. Curious to know,
Yep.
how do you guys complement each other? Is there one of you that's more, growth oriented, and the other one that's more operational, or how do you
Yeah.
guys complement each other there?
Yeah, absolutely. Now we're to a point to where we have all of the team built out, but for probably 2 years it was just her and I operating everything. And I think much of what we've done probably wouldn't be possible without her kind of holding me back a little bit. I'm very much a visionary, and it helped that I had a tech background to where I knew how to do the different tech stacks. I knew what we needed for the company. But I'm very much like, let's get to 200 properties tomorrow. And she's like, we need to pay taxes and do detailed stuff like
Yeah,
that.
yeah, yeah.
Helped a ton in our business to have that yin and yang, because I think it allowed us not only to scale, but we also had each other, because as you know, like in this business, it can be really tough in the first few years, especially in any hospitality related business. So it's always good to have, the visionary on the team, and then also like the integrator. Like, okay, how are we going to grow the company? And then kind of diving into, okay, we need to make sure that the properties are clean and the quality is high. That's not so much my strong suit. My strong suit is, I love having the sales conversations. I love doing the branding, the marketing, things like that. And she's much more detail oriented. So I think we had a really good mix starting the business.
Oh, that's huge, man. I think that that makes
Yeah.
all the difference because at the beginning, you cannot necessarily afford to bring in additional team members. You cannot necessarily afford to do more than, with what you have. And what you have is you and your
Yeah.
partners, right? So if you and your partners are not complementing each other, like what you're describing, it can become difficult. Now, what do you say was the if you could trace it back to a particular decision or a particular approach that you think truly set you guys up for success in terms of the speed at which you've been able to grow, because going from 0 to 175 properties in 3 years is amazing. Congratulations.
Yeah.
But
Thanks, man.
what did you do differently? What do you think, looking back and now also seeing how other property managers are structured? What is it that you did that you think most people are potentially missing out, that allowed to unlock, so to speak, that fast growth that you've been able to experience?
Yeah. Gosh, that's a really good question. I think there's so many things that we could kind of touch on that led to our success. I mean, we definitely hit it at the right time. Rates were low, everyone was buying. We took advantage of the opportunity, but we definitely built the foundation first. So we were able to take on a ton of clients. It didn't overwhelm us too much. And, sure, like we had extremely stressful days, weeks, and months, but we were kind of set up for that growth. But I think it's also helped that like we burned the bridge, man. So like once we got to a point where, our revenue from the business was just hitting what we were making in our W-2 jobs, one of us quit after the other. And, once you quit the job, like we were all in, like there was no going back from that point. So we had to make sure that we did everything correctly. We had to make sure that we were, continuing to scale. And there's so many mistakes that we made, but we were both 100%. And so like we are not, this is something we may do in the future now that we've built out the management side, but it's not like I was a real estate agent and then did property management on the side. I was like, I am just going to do property management and we're going to be the best in the area on it. So we really pride ourselves on being that local brand. Like we only operate in our area and we go at it 100%, because I think if we would have done it any less than that, we wouldn't have gotten to this size. And this business is stressful anyway. So you have to be 100% in and kind of lay that foundation first. But yeah, we were both all in. And I think that's super important with your spouse or partner, just to be aligned and know your roles within the company. I mean, it took us a year or two to figure out what are those roles with us in a relationship, but it's definitely helps as well. I mean, whenever we're both going 100%, the business can grow a lot quicker. And especially when you burn that bridge, you'd be surprised how quickly that
Yeah,
you
yeah.
scale
All
something.
of a sudden, you have no other way to look other than in front.
Gotta pay bills somehow, so we got to figure it out. Yeah.
I love that approach. I love that approach. Now, tactically speaking, what worked for you guys in terms of homeowner acquisitions? You mentioned you had a background in marketing. You mentioned blog posts that you were doing at the beginning. So, like, was it pretty much all organic? You did such a good job at blog posts that you were just getting a bunch of organic requests. Did you do some paid ads? Did you do some outreach? Like, what would you say was the key to your success in terms of homeowner acquisition?
Yeah, so we actually have never done paid, which is reassuring because we're just now starting to do it. So I think that's going to add some fire to, what we're doing,
Well,
but it was
definitely,
all
yeah,
organic.
that's
I
amazing.
mean, we tried everything. Like, so I came from a world where like we would build a list and we would cold call and we would work people through a pipeline. So I tried that. I tried to scrape data for, owners and do acquisition that way. I tried to, send out mailers, did it very poorly and only did it once. But the biggest thing was our relationships in the community and also our brand. So, to back out what I was kind of talking about previously is whenever we started the company, like I built the brand first. It's not like let me get a couple properties and then I'll start building out. We had the website, we had content on the website, we had social media before we were really that big. So that way, whenever I was having conversations with homeowners, it added some credibility. They could look on our website. I can carry a conversation. I can tell them that the services that we provide, they could see our social media and see that we have a local brand. So that helped a ton, just building that brand out first and making it our full focus. But it was a lot organic, man. So like it helped knowing our way around a website because we were just ranking very high. And we also mixed that with a time where rates were low and everyone was looking for vacation rental management. So we were able to acquire a lot quicker. Now we're in a different landscape where rates are a little bit higher. A lot of our leads are coming from other management companies rather than people buying homes because we have
Interesting.
7.5% interest rates. But it's just a little bit of a pivot. That's what was working at the time, and something else will work for the next 90 days going forward.
Makes sense. Makes sense. And what was your first hire? Like, of course, at some point you need to get cleaners, you need to get like maintenance people and whatnot. But let's say
Yeah.
if we look at the admin side of the business or the back office side of the business, what was your first hire after you guys decided, okay, now we need to bring some additional help on board?
Oh gosh, I think we did a couple at a time because we've always been relatively lean. There's a lot of companies that are our size that have staffs of, 20, 25 people that are locally. We have a staff, but a lot of them operate as independent contractors. So I want to say that our first hire was a property manager. And then we got to a size to where her properties were too much for her. So we brought on another property manager. Then we brought on a operations manager, like a chief of staff for myself to kind of, do onboarding, logistical stuff, like back end data stuff. Then we kind of got into the virtual assistant world and brought on virtual assistants. And now our team, we have our chief of staff, our operations manager, Melody, and myself at the top. Melody kind of focuses more on her design company, but then we have two property managers underneath them, and then two property inspectors underneath those two property managers, and I'd say probably 20 to 25 cleaning teams in house. So it was definitely a process because when you're getting started, man, it's like you don't have the revenue. Like you got to invest everything back into the business. So
Sure.
there's a certain stage where you get where you need to remove yourself a little bit, and then we started to bring on team members, and then we can remove ourselves a little bit more. And we're still in the process today, 3 years in, trying to remove ourselves even more and kind of buy back our time so the business can run more efficiently. But it's a process for sure.
Interesting, interesting. And if you look at that structure that you have in place right now, it's great to know that you are lean, right? And I think that being lean is a great strategy that we tend to realize it's a great strategy when times are tough, right? And
Yep.
and times are a little bit tougher right now than they were in the past, that's for sure. So I think thinking about how can you do this with the leanest team possible is a great takeaway for anyone listening. But also like just trying to understand where you're currently looking at your time. Where should you be as a founder, as the head of this organization right now that you have a
Yep.
certain structure in place? Where do you think you should be spending most of your time? How do you think that has evolved? Like, of course, at the beginning you had to do everything. There was no one else in your
Yep.
team. You have to do what has to be done. So it's even more of a challenge to prioritize. But as you start growing and you start seeing, okay, well, I can outsource this here. I have my operations manager here. Like like how are you currently thinking about what should be your contributions and the areas where you spend most of your time? Is it mainly growth related at this point? Are there certain areas in the business that you still keep very close to you, such as revenue management, for example? I don't know. I didn't hear you talk about a revenue
Yep.
manager in your structure. Like, what are your thoughts about where you need to be spending most of your time at this stage where you are right now?
Yeah, that's a really good question. I think primarily growth and oversight. I want to get to a point to where, I'm buying back my time as much as possible. but I think it's important because we pride ourselves on being a local brand. Like we're just in Northeast Florida, so I have to kind of oversee some things, and that's our selling point, right? So like if there's an issue at a property, it's my wife and myself bringing them over a bottle of wine, and like that's our value add. However, what I kind of learned over time is it actually benefits the entire company for me to delegate stuff out more, because I probably shouldn't be, running over to houses to swap out a doorknob or something maintenance related. Now, if it's like a personal touch thing, sure. I mean, that's the benefit of being local. But I also found that, I often get in everyone's way as well. I'm very much screw it, let me do it myself type of guy, but I've kind of learned more to delegate to our team and give them accountability over their book of business or their operations, because they do things better than I do in those areas. So like our chief of staff and our operations manager, like she's so stinking detailed where I'm not. Like I'm vision, I'm go, I'm like, let's build it. We'll figure out everything else later. But it takes, from my experience, the different categories in your business and putting them all together to kind of be successful. But yeah, I mean, to answer your question in short, it's what's going to create us the most revenue. My best use of time is going out and getting more clients or working on our brand or doing marketing or doing stuff that's creative within the community to kind of grow our local presence.
That makes a lot of sense. That's very interesting. Now I'm curious because you had this vision of wanting to grow, right? Since the very beginning. I'm curious to know, when you're looking at establishing your tech stack at the beginning, I feel like there's two approaches, right? Let's say if you look at a decision like, okay, what PMS should I go with, right? There's people that are gonna be like, I'm gonna get the PMS that I need now, or maybe I'm gonna get the PMS that I need for the next 6 months, right? And for someone like you that grew so fast, I mean, if you had done that, you would have outgrown your PMS in 2 weeks. Like you would have outgrown your PMS super fast. So what was
Oh,
your?
we did. We did.
Is it
Been
what
been
happened?
there, done that, and it was
Okay,
such a pain. I mean,
tell us more
if
about that.
I had to go back, I would have, and anytime I'm asked this is kind of what I relay is I would have built out our technology for the company that we want to be. And what I mean by that is, trusting in your vision, your brand, where you want to go. We mapped everything out. We knew how to get there. But I'll give you an example. Like whenever we first started the business, I started with IGMS, which is a kind of a smaller PMS. It does good if you have a couple properties. I just didn't know, I knew, but I didn't know that we would have gotten to this size. So we switched PMSs at like 120 properties, and it was a nightmare.
Oof.
So if I were to have gone back, I would have put that technology in place before. Because one of the challenges that we ran into is kind of your more enterprise level management systems. The onboarding is like 90 days. It's a little bit more time intensive, and we were at a point where we were probably bringing on 10 partners a month as far as properties. So I don't have time to wait 90 days for onboarding for a management system, because we would have had double bookings. This would have been messed up, this would have been messed up. So if I had to go back in time, I would have built that tech stack to where I wanted to be, not necessarily where I was at that second, and just believed in the vision and knew we were going to get there, because it's a bigger headache in the back end. It was I wouldn't wish that on anyone. Transferring management
Man.
systems with over 100 is a
Well,
bit of a
yeah,
pain.
especially once you have so many properties already up and running.
Yeah.
Like one thing is doing an onboarding that takes 90 days, but you have a handful
Yep.
of properties, or you're onboarding them as you set them up. But now you have reservations, you have guests, you have new properties coming in. Crazy, crazy.
And it's on you. I mean, the guest doesn't care that you're transitioning management systems. The owners don't care you're transitioning management systems. So, yeah, it's any advice to anyone who's looking to scale. They have a plan in place. Get the tech out of the way now. Know where you want to be in 5 years and put that sort of technology in place, because it's only going to make your life easier.
Now you coming from the startup world, have you given any thought to building some of your own technology? Is that something that you are looking at, maybe just in certain areas around, let's say, I don't know, direct booking, website efforts, that you feel like maybe that's something you want to develop yourself and not use any existing technology vendors? Like, if so, which areas? If not, tell us what your thinking is, which I think, you know, nowadays there's so many good technologies out there for most
Yeah.
technology categories that why reinvent the wheel? But I'm curious to know your thoughts coming from that startup tech world.
Yeah, that's, gosh, that's such a good question, because Coming from that world, you have itches to do things that are customized. Because even whenever we were working in that space, like we could customize Salesforce and HubSpot, and they were building out custom solutions for us on the back end. And I think you made a good point with don't reinvent the wheel if everything's working great. There are so many incredible pieces of technology out there. So, like, stuff that I have on my wish list is, dashboards for our team. Like, that's stuff that we're building out, like an internal CRM, stuff like that. As far as like a pricing tool or a management system, tech takes a lot of capital, man. So it's a lot of time that would take away from like our management business. But stuff that we could, use internally that's very easy to build out. That's some stuff that we've been working on, just like a very basic, dashboard for KPIs and, little things like that. So we can track metrics as far as like revenue or average daily rate or anything like that. So the less complex stuff, yeah, we're definitely building some of that stuff out, but kind of like your core pieces of technology, I'll let the pros do that and people with a ton of capital behind
Oh
them.
yeah.
And yeah, not for me.
Oh, that makes a lot of sense, and it's very similar to our philosophy as well.
Yeah,
Don't reinvent the wheel. Become power player. Become a power player, a power user of this
yep,
large, important, pieces of software, and then just build things that might be required to have them talk to each other, or as you were saying, a data visualization tends to be an area where
yeah,
there's a big gap out there. We feel like. Um, what does that tech stack look like for you right now? If you don't mind sharing, what is it that it
yeah,
looks
man.
like right now?
So yeah, absolutely. So we have a decent amount of technology, probably more than we should have, but we try to stay relatively lean. So as far as our management system, we use Hostfully. It's worked well for us. I demoed Streamline, some of the other bigger ones, Track as well. Really liked them. The onboarding time was a little bit of a turnoff for us because it was just where we were at in the business at the time. Like I had mentioned, we were, bringing on so many owners that it's tough to do that at 120 properties and still continue to grow. So Hostfully has been great for us. Pricing, we use Wheelhouse, great for us as well. Both those two pieces of technology, their support's been incredible. So anytime I want something built out, I have a question, they're really great about getting back to us and getting an answer to us quickly. We built out I'm still looking at CRMs, but we've built out, kind of like a makeshift CRM KPI dashboard in just Google Sheets. So just paid someone to develop that, and then it shows us all the numbers that we have. Key data is another good resource. We use that for a lot of the back end stuff, metrics for the business. We actually just signed up with them. What else do we use? Breezeway was a game changer for us from an operations standpoint. It was hectic, man, and it was a lot of me wanting to pull my hair out because the systems weren't in place just yet. Breezeway alleviated a ton of that with our technology because if we have 30 cleaning teams, 6 to 800 reservations a month, like that's a lot, especially with maintenance. So it's also increased our quality as well. So that's went up quite a bit. So whenever you first start the business, it's a little easier to, maintain Superhost and VRBO Premier Partner. We got to a point probably around 120, 130 properties where we lost it. And then
Hmm.
we put Breezeway in place and we actually got it back. So that I think it's a little bit of a vanity metric, those badges on the online platforms. However, what it showed us is by tightening up the operations a little bit, our quality increased. Like we were on top of maintenance stuff. We weren't missing cleans. Like everyone has a task. There's detailed notes. And even from like an owner retention standpoint, it's really helped. We've had owners reach out to us from our expense reports and just like, hey, what's this cost? Like, what happened in this situation? And for us to show a detailed report, it just adds credibility and it helps
Hmm.
that client stay around longer. They trust you, they know you're on top of it. So that's definitely helped. And then we use, gosh, Monday.com for, onboarding and kind of task management.
Hmm.
Another game changer has been Slack and then Zapier. So
Hmm.
we have everything in our business essentially has a Zapier connection on the back end. So what we do with Slack is again like whenever we were a little bit smaller, but we had a decent amount of properties, I probably had 25 group chats at a time going. So this is kind of hinting back to what we were talking about previously, like buying back your time, getting out of the business a little bit. I probably don't need to have 20 group chats with
Hmm.
everybody at every single time. So we built out Slack and everything funnels into a bucket. So whether it's maintenance, reviews, claims, Stripe disputes, communication with our virtual assistants, everyone knows what bucket they need to play in.
Hmm.
So it helps us stay on top of things because it's a lot of reservations every month.
Wow, that sounds like a very
Yeah.
complete tech stack, anything that, I'm just thinking, anything that you use on the guest experience side of things as well, that perhaps wasn't mentioned, or that's not too much something that you've
We Yeah, we've used a couple things. We used mostly guidebooks for quite some time, and that was good as far as guest experience because they really got kind of a detailed look at stuff to do around the city. But we actually built out an internal thing for that,
Oh,
so
you did.
it's helped save a little bit of money on that end. But as far as guest experience, man, just the personal touches. I think this isn't a piece of technology, but something that we put in place was property inspectors. Like that was the best thing for guest experience that we could have done because we didn't have that whenever we were a little bit smaller. And especially, growing this quickly, like I didn't know we needed to have that. Like we're still learning stuff every single day, but putting them in place and actually hiring people that are on our payroll to walk the properties, stage the homes, make sure, we're grading the cleaning teams or keeping the cleaning teams honest. And then also, alleviating some stress from our property managers. We only have two property managers, so it's tough for them to get to 180 properties, like if there's check-ins. So putting someone like that in place in our business, it's helped a ton, man. I mean, there's situations, as you know, hot water's not working, internet's down, there's a bug right next to the door whenever they walk in. But by having those property inspectors in place, it alleviates a lot of that. And they operate through Breezeway as well. So there's a detailed owner's log of everything that happens at a property. So that's been a huge help for us.
That's amazing. That's amazing. Now you talked about
Yeah.
owner retention there, and I think it's super important because you can get a ton of owners, but then the game is in keeping them, right?
Yeah.
That's where the game happens. So I'm curious to know, what do you think has worked for you guys in terms of the way you deal with homeowners? Like, let's talk from the expectations you set from very early on to how involved they are in decisions around setting their rates, and especially having added so many owners so fast, how have you evolved that relationship that you have with your homeowners, that has gotten you to where you are now?
Yeah, it's such an important part of the business because you don't have homeowners, you don't have a business. So it helped a lot. Like we had a conversation previously about the foundation and our previous jobs, kind of going into the management company. I was an account manager as well. So like I'm used to having those tough conversations and just picking up the call whenever there's an email that maybe doesn't come off the best way and then hashing through that. I think that's played a big role, just my previous experience. Like there's always situations, don't get me wrong. Hey, why is revenue a little bit low this month? Or hey, we saw this review. Those things are going to happen. Like we are human. I can't control the market. There are situations where there might be a bad review that comes in, although we try to keep them as good as possible. But it always helps to get on the phone call with that homeowner and explain the situation and talk through the situation. I would say, 9 times out of 10, what I learned from, being an account manager for a pretty big book of business is people just want to be heard. Like they just want to be in the know so they can trust you. So a lot of times I feel whenever people have issues with owner retention, they're just not calling them. I mean, I'm not going to name any names, but we've had people or owners come to us from larger nationwide management companies, and they say they can't get their account manager on the phone for 90 days at a time. We're in group chats with our owners. So like they're always have access to us if they want to, jump on a phone call with us and talk about, pricing or the property, whichever, it definitely helps. And one thing we do as well is I'm still very involved with anything that's owner retention. That's something that I don't think I'll ever remove myself from, which I think has been a benefit. But we also introduce them to our property managers. So they're handling a lot of conversation. They get to know them a little bit better and just always going the extra mile, like just going over the property if the owner wants you to. Obviously there's certain boundaries at times, especially when you get to a certain size. Like you have to have a life as well. But it's a big asset for these owners. So allowing them to speak, they just want to be heard, talking through every situation. It's helped us a ton, especially in this landscape. Rates are higher. We're in a we're in a landscape in Florida to where everyone's property taxes and insurance are going through the roof. So we've had a lot of tough conversations, but it's good to kind of get on the phone with them and break everything down and see what their options are. Do you want to sell the property? Do you want to stay with, vacation rentals? Do you want to go to long-term rentals, and just break out what the best route for them is? But it always helps just to have that conversation, man. People just want to be heard, and you just need to talk through situations.
Yeah, that's amazing. So yeah, so it seems like you're playing the role of both the salesperson and the account manager. So at this point in your structure, in your team structure, like that's still Andrew handling
But
both
that's
of
what I
those.
like doing. So I'm
Right,
just going to
right.
keep
No,
doing
and
that
that
stuff.
and that
I
makes
like doing
sense.
that
And
stuff.
those are things that,
I like doing that
yeah.
stuff. I like doing the marketing, the branding. That stuff is fun for me. I think, as an owner, you get to a point to where you shouldn't be running over to houses, or you shouldn't be dropping a blanket off. Like, we hire runners for that. If it's a situation where I need to talk to a guest, that's where I can step in, or I need to talk to an owner. That's when I can step in. But that's the best use of my time,
Abs-
is going on sales calls, trying to get more properties, working on our marketing and branding, or having those conversations with an owner. I mean, that's I hint on this a couple times, but that's our value add, man. Like, being that local brand, it's just my wife and myself, and giving them a direct access point to us has it just increased trust a little bit.
Oh, it does a tremendous job, I think, at increasing
Yeah.
trust. And I think that I definitely agree with you that, especially if these are things you enjoy, those homeowner conversations, well, why delegate it?
Some of
If
them aren't that fun, but for a majority of them, I
some
enjoy.
of them are not tough, definitely. Now, let's talk a little bit about that landscape, economic landscape, and whatnot, everything that's happening with the interest rates, and you also being an investor. I'm curious to know, when you're either advising homeowners that are being stressed out by, increased expenses and, rates that are not as high as they have been perhaps, and, whatever it may be, but you're also looking at it with your own properties. Like, what's your current view on the market from an investor point of view? Are you looking at, are you openly acquiring new properties at this point in time? Are you more in a, just getting stable phase, just getting through the rough waters and saving up cash for the opportunities that should be coming into the market in the coming months? Like, what's your view on the market right now from a real estate investor point of view, homeowner point of view, that's looking at perhaps growing and capitalizing from these difficult times?
Yeah, it's definitely a challenge now. So what we're running into is, about 12 to 24 months ago, rates were very low. So everyone and their brother was buying a vacation rental. So, our market is a little saturated for the basic home. So what we're doing right now with owners is we're just pushing them to kind of elevate the property. Like, now's the time to add amenities. Now's the time to add the wallpapers. Now's the time to add the Instagrammable moments. Because the properties that we have that are 3+ bedrooms, pools, they have hot tubs, pickleball court, like, those are the properties that are crushing it still. So whenever I have conversations with owners, and kind of like my point of view on the market is, A, it's not going to last forever. B, we can't control it. We can't control the economy, so we need to make the best out of the situation. And also, C, travel hasn't slowed down. People are still traveling to Florida all the time. People are still traveling all across the country. What we're seeing is there's just more properties on the market, so it's compressing rates a little bit more. So you got to have it stand out. So, like, whenever we have a basic home, a good home, but let's say it's in like a B class neighborhood, it's just a 3-bedroom home. Like, those are the homes we need to go in and have that conversation with the owner. Like, hey, man, we got to do a fire pit. We got to do ping pong. We got to do a hot tub. We got to do something to make the property stand out, because people are still traveling. But what I'm kind of seeing in Northeast Florida is, 12 to 24 months ago, if I was traveling to Florida and I had 4 options that I really like to stay at, now I have 12. So you have to stand. That's why design is so important. I think that's why, the design company was such a big value add for us. So we started that probably about 2 years ago. My wife's absolutely crushed it with, I think she's probably designed 150 vacation rentals in the past 2 years,
Wow.
but we just saw a need. Yeah. So how that kind of came to birth is, we got a property here whenever we reallocated our capital from St. Louis. And we actually had a staging company just stage it as a short-term rental. Again, very similar to the management, we just thought we could do a better job. So my wife kind of picked that up and ran, and started a design company. She didn't have any experience behind it, but it's absolutely crushed it so far. But we just saw a need in the market. But that's the design, super important. Just having that tough conversation with, owners, where, we got to make the property stand out. Like, this is what's going to get it booked, and rates aren't always going to be high. The economy isn't always going to be the way it is right now. Vacation rentals have been around forever, but I think it's a good thing as well. Like, it's the season where people are going to separate themselves as a business and also operators, because I think a lot of people, especially in this market, the people that kind of did it for a quick buck, they're going to get out, and then the saturation is going to go away, and the people that stuck through this market, they're going to be crushing it at the end. So that's kind of what I'm putting in my head, and also, sharing with our owners and showing them the data of what's actually happening, and
Mhm.
kind of having those conversations. But I mean, travel's not stopping. We just have to elevate the design and give a better experience now. That's it.
It's the increase in supply, like you mentioned. That's really what it comes
Yep.
down to. So as you said, if there's more options now, well, you have to stand out. The sign
Yep.
is definitely one of those levers you can pull in order to stand out. So I think it makes a lot of sense that you guys also have the design company as an add-on. Now, what about you personally as an investor? Are you currently selling any of your properties? Probably not. Are you currently like what's your strategy right now? Are you currently trying to buy? Are you currently trying to take other people's mortgages, so to speak, subject twos or strategies like that?
Yeah.
Or what stage are you on as far as an investor? Are you are you acquiring? Are you holding? Um, are you just kind of like
Yeah.
waiting to see
I
what's going to happen?
I think you mentioned something earlier, which is super important now on the management side and also acquisitions, is just carrying cash. Like, because there's going to be an opportunity whenever rates lower, there's going to be an opportunity where there's more supply on the market. So, as far as our actual market, we're not currently buying in our market unless a really great opportunity pops up. But we've been saving cash. So, like for example, we want to invest into experiences, and we've been running this business for 3.5 years. We don't take many vacations. Like, we have gone 100% in on this, and we just went to vacation in Blue Ridge, Georgia, and we're going to put an offer on a cabin there just because it's more of it's a lifestyle thing for us. Like, obviously it can be a tax play. It's great if it cash flows, but then we're able to kind of get into a different market and invest there because we can put 10% down and get a decently favorable rate. So as far as like our current market, we will buy if stuff pops up, but we have a couple more interesting opportunities outside of Northeast Florida.
Got it, got it, got it. And in terms of how you scaled from your own personal portfolio from 0 to 11, is it that you have right now 11
Yep.
properties? Um, what was the strategy there? Was it really just qualifying for personal loans, like saving up that down payment once and another, and just a rinse and repeat? Did you do any forced appreciation, or did you do any
Yep.
refinances of some of your properties that helped you with that next acquisition? Like, what was sort of like the strategy that you used to grow your personal, because we talked a lot about the growing the property management portfolio, but how did you grow your personal portfolio from 0 to 11 properties?
Yeah, so interesting story. And I have a really good piece of feedback for anyone getting into the business is we kind of shot ourselves in the foot. So we had W2 jobs whenever we started buying long-term rentals in St. Louis. We sold those, reallocated the capital to Northeast Florida. We still had our W2 jobs. So we picked up a couple of properties then. Whenever we were kind of diving into the business, we went 100% into the business, but come to find out, you're not as bankable if you don't have a W 2 job.
There you go.
So, despite any cash reserves, it was tough for us to get financing for 2 years. So, we haven't actually bought a property in about a year and a half, 2 years. So, we bought a couple of rentals once we got here to Northeast Florida. But from that point, we kind of got into a landscape where rates started to go up. So, we started doing lease options. So there's a couple properties that we would master lease. We don't do a ton of that. And then we have a couple properties that we do a lease option on. So we essentially go to the owner, we get very favorable terms. We have an option to buy the property at a specific price whenever that option expires, and we can either take it or not. So our game plan with those is we have 3-year options on those properties. Our rent payment is actually lower than what our mortgage would be at 7.5% interest rates. And then hopefully, whenever those options expire, we already have a predetermined price that we're going to buy the property at. And then our game plan is rates will be a little bit lower in 3 years. So that's why we kind of pivoted towards that instead of just buying properties with extremely high rates right now. I think there's always a way to acquire properties. It's just what's happening right now in the market, and that's kind of the pivot that we took because we had to be 2.5 3 years in business for us to get financing. So we kind of shot ourselves in the foot by it was good and bad that we dove in very early it helped us scale the management business, but it was challenging for us to get financing. So we had to get creative with lease options and master leasing and things like that.
So what would you say is the benefit to you? Like, just making sure I understand this correctly. If we compare arbitrage, you're just subleasing, you're just renting and you're subleasing.
Yep.
So of course you get the cash flow, but like there's no equity that you are building or will build because there's no option to buy. So the
Yep.
is the benefit of the lease option that you have set the terms in advance of what that payment will be, like that purchase price. So you're kind of
Yep.
like doing the due diligence while earning a little cash flow, and then once you're convinced, you can decide, okay, I pull the trigger or I don't. Is it the due diligence part, or like what would you say what is the thinking there? We're just gonna set a favorable purchase price in advance and then have the option to buy it. How do you compare those two models, like the lease option with the arbitrage, in terms of why it makes sense for you?
Yeah, I think we started with master leasing or arbitrage before we did the lease options. For some of the points that you had mentioned, like it's a cash flow play, like that's it. So it allowed us to get cash flow on our property. We would kind of negotiate into multi-year terms. A lot of times it's like a multi-family building that we do. So we're able to get cash flow off of that for the time being. But we made the pivot to, kind of diving more into lease options is so we could have that ownership on the back end. Cause that's what we want to do. Like we want to own the real estate. But whenever we were going into master leasing, I guess I was still educating myself on lease options. So like we had capital, we couldn't get financing. So we just did a couple of master lease properties to kind of reallocate stuff so we could get cash flow on that money that we have. But then we made the pivot to the lease option so we can have that the option to buy on the back end. So we can let the property appreciate. We already know the price that we can buy it at. We don't have to buy it if we don't want to, depending on what's happening in the market. But at least we have that option to get into the real estate and get the benefits that way, but then also get cash flow before that option comes due.
The payments that you're making, the rent payments you're making on the lease option, do they count towards your down payment if you decide to go through and buy, you know, 3 years
You
from
can
now?
structure it that way. You can structure it that way. We didn't. We're just, it's strictly a cash flow play for us until that option expires. And then we have the price that we're going to purchase the property at. Or we don't have to if we don't want to, depending on what's happening in the market. Because
Exclusive in
what
the
if,
sense that you're the only one who can buy. I like buy.
yeah,
Okay, so
we get
no,
the first right of
you
refusal
get
on
the
that property
first
once
right
the
of
option
refusal.
expires. Yeah.
Okay,
Yep.
that makes
Yep. So
sense.
at least we have more exit strategies with it to where with traditional like arbitrage or master leasing, like it might be a 3 or 4 year strictly cash flow play. Like you're not buying it at the end. They're going to keep it. They got you to rent it at a premium. It's just cash flow. But with this, we have that option to buy, which that's what we want to do in the long run is own the property. So it just made more sense for us because we're also on the tail end of being a little bit more than 3 years in business. So now we're bankable again, to the bank. So it was a transition that we had to make with our situation because we dove in very early with quitting our W-2 jobs. But then without the W-2 jobs, they don't see you as bankable regardless of how the business is doing. So we had to
Yeah.
wait for that.
And talking about those exit strategies, and I like to hear people's thoughts on this as it relates to real estate investments in vacation rentals.
Yep.
Like in multifamily, it's a lot easier to put in place forced appreciation deals where you increase the net operating income, and the bank is going to recognize those new revenues from the
Yep.
efforts you've put in refinancing, in renovating and upgrading the property, and then you can go ahead and do a refinancing. Uh, but in short-term rentals, especially when you're looking at single-family properties, as you just alluded to, the bank is going to want to see 2 3 years, 2 years of revenue, and then they're just going to
Yeah.
give you a loan as an operating business, right? They're not really taking the asset as a business in and of itself. So I'm curious to know, when you're looking at the properties you do own as short-term rentals, what are some of those exit strategies other than selling the property that you're considering? Like, are you seeing more products that are perhaps taking into consideration uh, STR revenue into their underwriting that you could leverage for your next acquisitions? A lot of people are talking about in the future, there's going to be institutional investors that are going to want to buy STR portfolios based on cap rates, but then we're talking volume. We're talking like you need to have a lot of single family properties for an institutional player to be interested in buying your portfolio. So I'm just curious to know how you think about your exit strategies on the properties that you own.
That's a really good question. Obviously, I think you can always sell the property, and that's an option. We are very fortunate with the properties that we bought because they were before the market turn. So our rates are like 3%. So we're pretty much with those properties. However, the properties that we're looking to buy, and like I had mentioned in Blue Ridge, Georgia. So you have to make those more of an experience because your rate's going to be a little bit higher. So we have to have something that's going to press the rate up. So if I buy a property, without a fire pit or without a hot tub or without any amenities, I'm not going to be able to charge very much per night. So like those are the properties where you have to invest more into the design and the amenities. But you hit the nail on the head. I think there's going to be a lot of private equity cash that's once everything kind of settles down, that's going to be buying up big portfolios. And I've seen probably in the past 12 months more and more funds pop up that are buying luxury vacation rentals and really making them an experience. I think it's probably not to where multifamily is, to where you can really syndicate these deals, make the improvements, and then sell it after 5 years. Because, like you had mentioned, if you're getting something that's relatively turnkey and just furnishing it, it doesn't really add a ton of value with that as to where you would with multifamily and fixing, all of the units up and then getting a different cap rate. But I think there's always options. I mean, you could grow a management company and get acquired. You can grow a portfolio of vacation rentals and get acquired by private equity. I think whenever the stock market is hectic and the economy is hectic, people are going to be looking for different types of returns. So, like for example, I know a lot of my colleagues, they were wholesalers or flippers, like the hedge funds dried up. They weren't buying single family homes anymore. But I'm seeing a little bit of a pivot to where people are buying hospitality related things and brands, to where it could be a management company, it could be a group of properties, it could be a fund. I think a lot of that is going to pop up over the next, 24 months.
Sure.
I mean, I didn't even really see vacation rental funds in the past year. And now, there's four or five of them popping up like every other day. So I think a lot more institutional money is coming into the space. And I think there's a lot more products. There wasn't really a vacation rental product like 14 months ago. Now a lot of mortgage lenders have some sort of product for short-term rentals or, co-living or different, asset classes like that. So I think it's only going to continue to grow. I mean, vacation rentals have been around forever. It just got super popular whenever Airbnb went public. And I think it's only going to continue to grow once the economy kind of stales out.
Amazing, Andrew. And just to wrap things up, I want to be respectful with your time here. The hour is almost up, and trust me, I could go on for hours because this has been a very, very insightful and enjoyable conversation. But just looking at the vision you have for yourself and the company moving forward, I mean, you talked about a few of the possibilities that could come up down the line, getting acquired and whatnot, merging, you starting acquiring other property managers. Like, I'm curious to know, you've gotten to a place where, not every property manager gets to. You could continue scaling and just eventually go nationwide if you wanted to, but let's, like, what's the future? What can we expect to see from Andrew in the coming months, years? What's kind of like your vision now that you've gotten to where you are today, moving forward? What is it that you're trying to accomplish with Joseph Allen Properties?
Yeah, man. I think, coming from a technology background, like all you hear in that space with startups is their goal is to get acquired. Like they want to have that exit.
Exit, yeah.
And I think as a founder, like that's something I got super excited about is, we want to exit, we want to sell the company, we're going to continue to grow. Now I think my vision's changed a little bit where we just want to continue to grow this brand. I mean, I think there's a ton of opportunity for us to, absolutely be, a dominant local brand. I don't see us going nationwide. I think that's a lot of headache, but I think there's so many properties on the table that need different management in our area that we haven't even touched yet. We don't even have a retail side because I know there's a lot of brokerages around the company that will have, they're selling vacation rentals, they're managing on the back end, they're doing design. There's so much that we can dive into deep in our niche where we don't have to exit the company. Like we can continue to ride this out and grow it, and that's part of our vision is to have a local brand that everybody knows. So we're just going to keep getting bigger in this area.
What do you think made you make that switch between, you know, idealizing that exit as the end point, what you want to end up with, and now saying, well, you know what, maybe I don't even want an exit. Like, what do you think clicked there that allowed you to say, well, like that's not the focus anymore?
I think I've grown up a little bit, to be honest with you. I think when we started the business, I was probably 27, 28, and like I had mentioned, you talk about the exit, you want to sell it, you want to make a ton of cash. But now, like, the money's not too important. Like, I just want to build a brand and build a legacy. I kind of look up to those companies that you see in some of these destination markets. They've been around for 50 years. They pass it down to their kids. They have an incredible company. Whenever you think of vacation rental management in that area, like, you only think of a couple companies that have been there forever. I think that's super exciting because we're going to make plenty of money along the way. Like, that can't be your motivation behind building a company or building a brand, because then it doesn't truly scale. You get burnt out. I don't think anymore that's the right way to do it. I think it's just more intriguing to me to build a really cool brand and, like, do stuff off of our brand. Whenever you see a lot of these really larger companies, not even in the hospitality space, but let's say like Ryan Pineda and Grant Cardone and like some of those guys like that, they've built their enterprise and then have so many businesses off of that enterprise. I think that's really cool. Rather than building something really quickly and selling it, we're probably just going to continue to rock with what we're doing, because we can. The cool thing about this space, man, is like, we're only doing management right now, and we got really good at management. There's cleaning companies, there's the retail side, there's, raising capital. Like, there's so much we could do with the Joseph Owen brand that we don't have to sell it just yet. So we're just continue to kind of keep rocking in our local
Yeah,
local
the
area.
brokerage division, like you were
Yep.
mentioning earlier, you
There's
have the
so many
design
opportunities.
company.
There's so
So
many
yeah,
different things you
just
could do.
building around it and developing further. I think, yeah, no, that makes a lot of sense, and that is indeed what the likes of Grant Cardone have done, and here they are still running that brand,
Still
and
chugging along. Yeah.
pushing that brand. And yeah, exactly. Well, listen, Andrew, this was amazing. I really appreciate you having taken the time. I think this was a very fun conversation. I
Yeah.
look forward to staying in touch with you and hopefully having you on in the next episode to see what other divisions have popped up in
Yeah.
terms of the brand there. But no, thank you so much for your time. I really enjoyed this chat, and we'll talk again very soon.
Yeah, man. We'll have another conversation in a year, but I appreciate having it.
Yeah. All right.